APAC Equity Daily Wrap, September 5, 2024. Asian markets steadied amid uncertainties surrounding central banks' rate decisions. The yen hit a one-month high this morning following stronger-than-expected wage data from Japan, but it gave up most of the gains by the afternoon. BOJ's Takata says the bank needs to look at inflation with fresh eyes after FX move. Asian equities traded within a narrow range. Nippon Steel ended a three-day losing streak, but remains in a holding pattern as its U.S. takeover efforts falter. Fast retailing's weight will be recapped for the Nikkei rebalance at the close on September 30th, which could lead to passive outflows equivalent to 3.64 times its average daily trading volume. J.P. Morgan downgraded China, a move that, while already anticipated by the market, still added to the negative sentiment. Looking ahead to September, larger risks are emerging. Last night, the July JOLTS job openings fell to the lowest level since early 2021, coming in below all estimates. The market's reaction suggests investors are now seeing bad news is bad news. VIX remained above 20 overnight, while tech stocks continued to show weakness. Atlanta Fed President Bostic said in a release last night that, "We cannot wait until inflation has actually fallen all the way to 2% to begin removing restrictions, as that would risk labor market disruptions." His comments appeared to be an attempt to calm the market after plunge. Expectations for a 50 basis point rate cut by the Federal Reserve have increased, with the probability rising to 50% at one point before settling back to 41%. However, non-farm payrolls remain the key focus this week. As I've mentioned before, while a 50 bps cut while sounds good initially could be taken negatively if investors perceive it as a relief cut rather than a preventive cut. Let's keep an eye on tonight's U.S. August ISM services data first. This data was among the key triggers in the market's rebound early last month.